If you have just $100 and are willing to invest in just 5 stocks, you can absolutely start building your Robinhood portfolio today. And that's what we're talking about in today's video. So welcome back to the channel. If you're new here, I'm Ken Curran, and this is 80-20 investing, where investing is as simple as it can be. On this video, let's try and hit 150 subscribers. Let's get 5 comments and 20 likes. But this is a series where I'm showing you how I'm building my own portfolio with just $100. Now, I have other portfolios out there. However, I'm also going to build a $1,000 portfolio, probably a $10,000 portfolio eventually, and just show you that process and what possible stocks you can invest in for building your own portfolio, whether it's $100 or $1,000. So without any further ado, let's just get into the first out of 5 stocks, and that is AMD. So today is Friday, June 8th. The whole market was down today about 1%, and so that's naturally a good buying opportunity. It's very rare, I mean, in my emotional understanding of it, it's very rare for the market to start off 1% or 2 down and then just continue to plummet. I mean, that rarely happens. And so buying the dip, they say, it actually works sometimes. So I bought the dip, and I bought AMD at what? $14.68. It's up 34 cents today. That's 2.5%. Doesn't really matter. For me, it's just a long-term hold. I love AMD because it's a growth stock. They have a relatively smaller market cap compared to a lot of other, people in the competitors in the chip industry, and so I like their profitability. I like their PE, their forward PE. It's improving, and then their income statement's great, and their cash flow situation is fine. So it's just naturally, because they have such a small market cap, I think that, and because they're profitable, I think that the growth of this company can be phenomenal in the long term. Let me just show you how they've been doing recently. So for the past year, 15 is, they had a little bit of a breakout right here. If you look at these peaks, and then across the past 5 years, it looks like it's at an all-time high. So it's a little bit interesting to buy this stock at the all-time high, but I love the company, and for me, it's just a long-term hold. And that's what you have to remember. If you're holding these companies for the long term, you shouldn't worry about getting it at the perfect buying price, even if it's an all-time high. If you think it's very fairly valued, and you like how the company's balance sheet is, their income statement, the revenue streams, and you like how the industry looks, then invest. I mean, for the second stock, let's talk about AT&T. So AMD was more of a growth stock. AT&T to me is more of a safe stock. It pays a sweet dividend, and then I also think it's gonna grow quite a bit over the next few months. I mean, first of all, people are freaking out about a recession coming. I don't really care or know if that's coming, but AT&T has dipped quite a bit over the past year, and then these guys will absolutely make a bunch of money during a recession. People are still going to be paying their phone bills, still going to be watching TV, and if you look at this, how they've been doing, you can see this little dip right there. So yeah, love this company's fundamentals. I made a video on them. Check it out on my channel. It has a bunch of views. Really like AT&T right now. So we had AMD, growth stock. AT&T is a little bit more of a safe stock, blue chip stock, and so is Bank of America, which is my third stock. These guys are right around 30 bucks. Right now, I love banking stocks in general. I think all of their profitabilities and balance sheets are doing very well right now. I think most of them are fairly valued, and I mean, honestly, I'd prefer Goldman Sachs, but literally because I'm holding just $100 in portfolio, I have to choose a stock that's a little bit priced a little lower. So. And sorry if this background real quick is kind of creepy. That's actually a pizza oven right there, and that's just a TV. So it's quite harmless, although that might look quite intimidating. But to get back to the stocks, I like Bank of America. I like all banks right now because there's a lot more, except Deutsche Bank. There's a lot more volatility in the market. With that, these banks get percentages of all those trades. And so for that sense, naturally, they're going to benefit from volatility. They're going to benefit a lot from people selling just because of fear, because, while people just emotionally sell regardless of a stock being undervalued or overvalued, these banks will absolutely stick to the fundamental technical analysis and then buy those undervalued stocks and sell them when they're just beyond overvalued. So I like Bank of America right now. Let's see how their past year has been. Very steady growth. They've gone up 200% in the past, 135% in the past 5 years. It's absolutely outperformed the S&P 500. And then let's talk about the fourth stock. Now this is a speculative stock. This is a fun stock. I say that really never your portfolio shouldn't consist of more than like 5% speculative or growth stocks, and I think this is like 0.5% of my portfolio or 0.4% of my portfolio. So it's something I like watching. It. So if you probably haven't heard of Helios Matheson Analytics, but you probably heard of MoviePass, which is these guys is a huge investment. So let's talk about the story behind these guys because it's hilarious. So in the past year, they're down 85%. But if you look at October 11th, they were up to $33. That's because so they made a huge investment in MoviePass, and the stock got a lot of hype, and so that was why it casually and slowly increased over the month of September, and then MoviePass lowered its subscription from $100 to $10 a month. And for those of you who don't know what MoviePass is, you see unlimited movies for $10 a month. It's a great deal, and it's just not profitable for Helios and Matheson. So quickly, they're gaining subscribers like crazy, and everyone was freaking out because they thought this is the next big thing. That's why the stock shot up 1,200%. But then everyone found out this wasn't remotely profitable, and this company was really running out of cash quick. So they might declare bankruptcy soon. However, they might also get bought out, or MoviePass might get a bunch of funding. They might figure out how to make it profitable, and if they do, you'll see the stock absolutely explode if they can recover profitability or just somehow innovate their model to get more funding. And I mean, they need to innovate and change something, or else this is going to zero. But it's 0.5% of my portfolio, so I'm not too worried. So that was the fourth stock. That was pure speculation, pure fun stock. And now let's talk about Callaway. So I actually did a cool report for them in my business class, so I got to really look into how they're doing. But I like Callaway a lot. They make golf balls, golf clothes, golf clubs, and they also have a decent sized investment in Topgolf, which is, I think, a very nice hedge to the future of golf, because golf numbers are okay right now. They're recovering, but Topgolf is this really unique event. This really unique event you can attend, in which you just go to a driving range. It's like an arcade. You can drink there. You go with friends. It's a very social event, and it's very different. Contrasts very well the casual game of golf. So in that sense, I think Callaway is well balanced. Their PE is a little high for me, but I do think they're going to break the $20 mark soon. I like holding them for the long run. I think they're going to continue to stay very profitable and then lower that PE gradually. But I like golf. It's a little bit more of a growth stock. So yeah, I hope you enjoyed this $100 portfolio video. Let me know what you thought of this video. Make sure to help me hit 20 likes, help me hit 150 subscribers, get 5 comments, and be as critical or as nice as you want about how I did in this video and what you want me to talk about in future videos by commenting down below. Thank you so much for watching this video, and I'll see you all in the next video.